Hey everybody, so good to see people from all over the world every single day. People from Tokyo, New Zealand, and Beijing, and I think it's just fascinating. Thank you all for being here. Thank you for the support. Today is Octa Tuesday. It used to be called TA Tuesday, now it's Octa because we're weaving in way more on-chain technical analysis. And as we discussed last week, Max Kaiser thinks TA is, what's it called? Astrology for men, but I'm still laughing about that a week later. But we're going to talk about a whole bunch of stuff. And again, thank you all for being here. So, math, money, and freedom. And this is, of course, edutainment. But let's talk about on-chain technical analysis. Again, it's a tool, not a crystal ball. But certain tools happen to work very well a lot of the time. And I love TA and I love on-chain to be able to identify when things are overheated or oversold. Obviously, the whole world, not just me, the whole world missed the 67. It was on such a tear. It looked like it was going to break a new all-time high and go straight to 100. Didn't happen. And the pullback was impacted by many impacts that go way beyond TA. And that shows you the limitation of things like TA. But when you talk about macroeconomic factors, money flow, geopolitics, like wars, stock market correlations, inflation, threat of interest rate hikes, all that stuff, that all has a big impact. So we try to weave everything into the story to make good decisions. So let's jump in. First of all, before we look at charts and stuff, we're going to talk about don't fight the Fed or mind the Fed. And a big thank you to Sanjay for sending this in to me. This was a Bloomberg opinion piece, and it was widely distributed around today. But the key is, the real takeaway is we have this threat of a Fed hike tomorrow. Let's not get too concerned about it. If you look at the history of Fed hikes, only twice did the market go down afterwards. So that was the brief rate hike campaign in 1971, which is over 50 years ago. The market declined 2%. And a longer one soon thereafter was 1972 to 74, in which the market declined 26%. But remember, for those of you who are old enough to remember, and I do remember, it was triggered by things like an oil embargo that tipped the economy into a long recession. And it's hard to know how much you can blame raising interest rates for the sell-off. And remember, the Fed generally raises rates when the economy is doing well. The economy is doing kind of okay. There are some bugs, there are some issues that aren't perfect, but it's not like the economy is tanking. So, and also I do believe they are in part factored in. As long as it's no more than 25 or 50 basis points, we're fine. If it says, okay, we're going to do 3 hikes over the next 3 to 6 months, we're fine. If it says we're going to do 4 of them now, we're going to go up 1 full percent, that will rattle markets. So everything else should be pretty much factored in, and the market should shrug it off, and history tells us that things kind of will continue to go higher. So the other thing as well, if you are in an increasing interest rate environment, you don't want to be holding a lot of these loans that could be subject to it. So this is kind of a change in U.S. household debt since 2003, and the people that could get hurt from this are people that have a lot of student loans. Obviously, auto loans was surprisingly high there for Americans. This is American data only, I'm afraid. And mortgage was next. Things like home equity line of credit, revolving credit lines are kind of going down. Same with credit cards, kind of flat. But that's important to know. Again, there's nothing wrong with borrowing as long as you can lock in low rates. So, if you can borrow at 3% for 10 years fixed, and the currency is debasing by 7 to 15%, it's a winning solution. Let's jump into Octa right now. This is on-chain technical analysis. Somebody complained last week, hey, your octopus only has 5 legs. It's like, it's a graphic, Anyway, people are very picky out there in the audience. This is from Mikolaj Zakrowski. I hope I got his name right. He put this together today. He's called @ProfDude on Twitter. And he put together this powerful on-chain metric, which he calls Bitcoin Illiquid Divergence. And I kind of tweaked that name a little bit because it works for one particular thing very, very well. Now, it does spot divergences between Bitcoin price and illiquid supply. So let's dig in to what it is. The thesis, as he says, is simple. If the price is going up and supply is going down, you have what's called a bearish divergence. And the corollary is true. If the price is going down and the supply is going up, like people are dumping tokens onto the market, that is a bullish divergence, which means buy. Okay? So illiquid supply means scarce supply. So I hope that came out okay. I'm getting a little I got distracted to turn off my phone. I left it on. I was put on airplane mode. So sorry about that. So first of all, I hope Mikolash does not mind me calling this the IDBN, which is Illiquid Divergence Bottom Nailer, because the results are pretty amazing, especially since 2019. So let's dig into the chart that he shared. I doctored it slightly with some ticks and X's where it works and where it doesn't. And what you see here is the bottom green line basically is when something is very, very oversold. And the red line is when it's overbought. You have the blue, dark blue is the illiquid divergence, and the black is the Bitcoin price. So if you're driving a car, don't look at this chart, but check it out when you get home. But when you look at the correlation between when we hit that oversold level, as indicated per his green line, and the actual bottom nailing, it is incredible. It only, at least as far as I could see, it missed 4 times, but it won more. But when we dig into some more recent charts, this is good. So let's look at the top nailing. Now, he does admit that nailing the tops is not as good, particularly in the old days. And in the old days, it was a very, very different world as it is now. But you could argue, I could argue that it kind of did work, but it was, in terms of picking a top, it picked a top, but it was a very short-term top, which was immediately followed by a big rebound upwards again. So it was like a mini top for a couple of days and then upwards and onwards. But since 2017, it does work 60% of the time. But what about now? So we could zoom into this. And he shared a little zoom in chart too. If you look at these since 2018, the results are 75% correct. And we are right now at that support. So if you look at this graph, you see the X on the left. Yeah, that missed the top. Okay, we'll put that aside. But since then, it's been perfect. We have, obviously, it was December 2018, nail the bottom. We have the, what is the, I can't read the exact date, but it was, of course, our March 2020 COVID dip. And then we have July 2021, the summer doldrums, as I call it. And now we have January 2022. It's exactly at that green line. So this is, again, when you look at all of these different indicators, and if some of them are right 60% of the time, 75% of the time, and you put them with other factors that are right 60% of the time, 75% of the time, you get the confluence of a much higher probability that we've hit a bottom. But again, if World War III breaks out tomorrow, all bets are off. But this is what TA and on-chain analysis does. So let's look at some more stuff. This is the fear and greed from a look into Bitcoin. And you can see this is the fear and greed index mapped to actual Bitcoin prices. And when you look at the fear and greed at a level of 10%, which means 90% are fearful, this is the dark red color. Now, I also doctored this chart. I added red arrows and the trend line. Trend line is going up, which is the price is going up, and the price has been going up very steeply since $3,000 in January 2019. So can you imagine buying Bitcoin at $3,000? Yes, it's a good thing to do if we had the opportunity back then. Now, if you look at the trajectory, obviously it's going very high, even at its weak point right now, trading at 37,000 precisely. We just hit 37,000. It's gone up 150 bucks since I started. The 4 red arrows indicate where the fear and greed was at 10%. Again, January 2019, we have March 2020, the COVID situation. This also corresponds to the previous slide I just showed you. We have the summer doldrums, and we have January 2020. So again, what I'm trying to do here is build a pattern of multiple indicators that bring that confluence together. You got the IDBN, and now you have the fear and greed. And what else do we have? So let's look at a couple more things. The MVRV Z Score. Here we are again. So steep corrections in bull markets are the blue arrows. I put little red rings around them so you could see them. This is, of course, from Glassnode. And basically, we normally get a reversal after hitting these blue arrows to breaking a new high. Now, early bear markets after blow-off tops are the pink arrows, or red, depending on how your screen shows it. And as the market panics, investors capitulate. And also, this precedes a strong relief bounce in some cases. Now, mid to late bear markets, the red boxes, where the MVRV Z trades below 0.85, signifies a period of poor profitability and low sentiment and sustained investor losses. So the question is right now, where are we? Are we going to go into one of those red boxes, or are we going to go up from here? And this is really, the destiny is in the hands of the FOMC and maybe Mr. Putin. So that's where we are right now, but it looks good from this perspective. If we had no geopolitics, no interest rates, no macro stuff, this would tell me with, a high degree of certainty that we're going up from here. So let's talk about some of the pain that is being felt for all those people out there, and I'm very sorry for them, but the pain is felt. Per this chart you will see here, these are the amounts lost by people who have been forced to sell or have sold or given up the ghost. May 2021, 2.6 billion was lost by investors investing in Bitcoin. June 2021, 3.4 billion. And December, 2.1 billion. And now January, 2.5 billion. So people are losing and they're selling at a loss. Don't sell at this level, even if you've been in it for a long time. I know the pain is hard, but when people are selling here, you've got other people buying, and I'll show you exactly who is buying. Now, this is another one here. This is the Bitcoin short-term holder SOPR, and the SOPR is an indicator that reflects the degree of realized profit and loss for all coins moved on chain that have lifespan of less than 155 days. Call it nearly half a year. Now, to confirm this, the metric has definitely accelerated downward this week, and that also is bearish. But after finding resistance through the 1.0 level through this downturn, that's where those down arrows are going. So every time it comes up, it's being beaten back. So we have had a spike in these short-term holder losses realized this week, and that's a problem. And psychologically, this is the big issue here. Psychologically, this hurts retail investors. Once they get hit, they take their exit, take their loss, and they move away. They just want to get whatever money they can out of it. They lose all faith. And that is the capitulation level that sometimes, at least for me, when the whole market's capitulating, that's when I call run into the burning building and buy. So we'll see. But that is, again, another indicator. Now, back to who is buying. This is the persistent drainage, as I call it. The Bitcoin exchange reserve, all exchanges, continues to drain. You can see the chart there, the bottom line, the blue line, top line is the black is the price. The blue line is the actual amount of Bitcoin on exchanges. And you can see it continues to go down. It's relentless in how it goes down. Let's talk about more relentless. This is the illiquid supply. Think of this as the corollary of what I just showed you. This is going up relentlessly. So the illiquid supply is simply blowing up. We are now at about 14,000, over 14,800 Bitcoin or something. So these are the Bitcoin that are kind of locked away, haven't been touched, won't be touched, probably be locked away forever by long-term investors like Michael Saylor that are holding forever, according to them. So let's talk about Michael Saylor. Coincidentally, is he buying again? Thanks to arcane research, yesterday afternoon, we saw a huge spike. Now, we're talking East Coast time, not Pacific time. A huge spike in volume. I was watching it. I was watching the charts. I was watching MicroStrategy. I was watching Bitcoin. And it went, that's when it pumped up, 14%, at $5,000 in 4 or 5 hours. It was a big move. But the interesting thing about this chart, the delta, the premium on Coinbase Bitcoin price per the actual Bitcoin price in other exchanges like FTX, Bitstamp, etc. It was higher. Now, what does that mean? When people are paying a premium, that means the Coinbase people, just a theory, and arcane research believe this too, and I believe it as well. Somebody is buying and they're using Coinbase to buy. So they're grabbing whatever Bitcoin they have. They're bidding over the ask just to make sure they snag it at this price because they don't want to miss this bottom. We might find out in a few days or a week, say, oh, Saylor bought another bunch of Bitcoin, because as he's been progressing, last time he kind of got close to nailing the bottom was June 2021 last year. I remember June 22nd, it was a great day to buy. And that's where we're in those kind of capitulation moments. But him and his team are getting better at nailing the bottoms. and getting in there. So he could have been buying yesterday, and if not, somebody else surely was. This is another simple example. I referenced this yesterday, but I didn't show this chart. This is somebody who has a big wallet, and they've been spending between $2 to $8 million at a time, every few hours, incessantly for 3 days, buying Bitcoin. Big stacking. And that's what I mean by the illiquid supply. These pros, whoever buying this, I don't know if it's Bill Miller or Michael Saylor or George Soros or somebody, they're buying and they're sticking it directly into cold storage. And that's why we see that illiquid supply going through the roof real fast. So again, retail investors, not a good time to sell. Now, let's talk about one other thing. This was a point of concern I raised about 2 weeks ago, where the futures perpetual funding rate went badly negative at a very short period of time, for about 2 or 3 days. And everybody's talking about this right now. But what I did was I dug into my Glassnode and saw that it was only negative for a couple of exchanges. And it was very heavily negative for Kraken, which is unusual. So that tells me a lot of people on Kraken are going short Bitcoin. Interesting. But if you look at other exchanges like FTX, OKEX, Bitfinex, all these X's, they were all positive and kind of neutral. So we will also monitor that very carefully, but I'm not too concerned. Sometimes it can blip, but this clearly shows it's blipping because people on Kraken are going short Bitcoin. But that's not the only thing people on Kraken are doing. But we'll get to that in a minute. So let's look at the first chart of the day. This is the Bitcoin versus SPX and the QQQ. SPX is the S&P 500, represents the top 500 US companies in the world. All the big names, you know them, the Teslas, the Googles, the Microsofts, etc. And the QQQ is the tech index that also includes a lot of these names. But what's interesting, over the last exactly 365 days, Bitcoin is up. The S&P 500 is up 13%. Bitcoin is up 12%, and the NASDAQ is down 1%. So I got to get some bigger screens. But it's very, very unusual. But it shows you how much tech and tech stocks have been beaten up for them to be underperforming like this, especially against the S&P 500. But I expect a big rebound as well. But remember, the higher the volatility, the tech stocks and Bitcoin are very volatile, the larger the volatility. So during downtimes, they get beaten up more. During uptimes, they rise higher. So little lesson. Now let's talk about Kraken and a report that came out. Kraken Exchange published a report today and lays out the immense potential of the Cardano blockchain, which makes it, they believe it's a superior blockchain competing with Ethereum. In all cases, they believe it's superior to Ethereum. So all the Cardano people out there, I'm saying something positive for you guys. I report the news as I see it, and I try find patterns in the news. Now, I've always said every token has a price. It's all about relative risk and relative return, okay? Now, when you look at Cardano and Ethereum, some of the oldest blockchain networks, but the former only recently launched their smart contracts. But due to high gas fees and scalability of Ethereum, the Kraken people ding them really hard. And they believe with the launch of smart contracts on Cardano, it made it much more likely to be an Ethereum killer. So let's look at the Cardano chart. Now this is where I want to kind of lay a point that every token has its price. So I analyzed, obviously we had our little death cross, but all tokens these days have a death cross right now. That was when Cardano was at $1.40. But you can see the 50-week exponential moving average is also around $1.40. The 200-day is about $1.80. And the 50-day is about $1.30. Exactly. The interesting to note here is Cardano has hit $1 price 12 times over the last 11 and a half months. And the report from Kraken is very bullish. And it may be too much ETH focused as far as I'd like. It doesn't go into other chains. But I did buy, bought more Cardano on the 22nd of June 2021 when it hit $1. And I have not sold it yet. Now with the launch of the Goguen smart contract functionality, which I know has its bugs, but if they can solve those things, it could give other competitors a run for the money. And dApp development has been limited to date, but they do have a couple of cool things in the pipeline. One is Empower, which is near and dear to my heart. That is a tokenization platform for real estate to address housing inaccessibility in Africa. And Sunday Swap. Obviously, Sunday Swap has some problems too. But again, you can see here from this chart, $1 is a good price to pay for Cardano, and it's like there right now. So I do believe this upside, relative risk reward of investing. So not financial advice, of course. Another one that is also beaten down to death is Chainlink. We had a great run when we identified it actually in a TA Tuesday at the end of December, and it shot from $18 to $28.50, and now it's tanked right back down again. But the interesting thing is, it's right here back at this $15 level. It's hit this 4 times in the last year, and it never seems to fall below $15. So again, for those snipers out there that don't have any Chainlink and want a secure asset that has a bright future, that's one to maybe look at. I feel like I'm selling tokens here. I'm not. I'm just saying what I see. So Fantom is defying the downturn. This is a beast. However, it's rare we got bites under $2 over the last few weeks or so, but we got another bite over the last few days. So again, Fantom under $2 is a good one to hold. Their TVL is exploding like crazy and very good to look at. Now Solana is hovering above 90. In fact, last time I checked, it was 94 when I started the stream. And now, let me see. I can't open my chart. There it is. 94. Still 94. So we'll see what's happening. It has been plagued with a whole bunch of issues, but it seems to be holding that $90 level. The level I'm concerned with, and the one that I think could be kind of a lot of people ask, what do you think the max floor is for Solana? Well, if the market goes bad tomorrow with the FOMC meeting, this could wick down as far as $75. So those with the sniper rifles could get some. The future, I do believe, is still very bright for Solana as we go forward. And Algorand, another one. Here we are, back to square one. This one has been beaten down 90 cents. Again, 5 times at 90 cents over the last year. But if you're wondering what that big green wick was and the big green volume back in September 2021, that's when Scaramucci bought $100 million worth for his fund. So he is a super bull. He talks about Algorand all the time. I'm not a big fan of Algorand, but Mucci is. But he hasn't done very well in this fund. So we'll see what happens. Again, just the point is the market's beaten down really badly. Everything is bad. Everything is bad, kind of like 1-year lows, kind of lost years. Well, not everything, but a lot of names are. So with that, I'm going to love you and leave you. Big thank you to the moderators and everybody in the chat, keeping us all safe. And I'll see you guys tomorrow. We're going to talk about how you can pump Bitcoin by banning it. Okay? See you guys. Thanks.